Hello traders, this is Fawad Razak, market analyst for City Index. Today is the 4th of November. It has been a risk-off day so far in the markets. As you can see on the list here, all the major indices are down quite sharply by around 1.5 to 2% or thereabouts, which means that the Japanese yen is the strongest currency pair today, and even the dollar yen is down as a result of that. The dollar is up against commodity dollars, and so the likes of the Aussie, the Kiwi, they're all down. At the moment, though, the dollar yen is testing or approaching a key support area between 153 to 153.25-ish, the shaded region here, where previously it had found resistance until it broke out of that area at the end of October. We're now retesting that zone as potential support area, and if it can hold, we could possibly see a bounce there. But given the risk-off tone, I wouldn't be surprised if the dollar yen were to break below here and head sharply lower, especially with the risk of FX intervention increasing, which is something that the Japanese authorities have warned about as the yen has weakened across the board. But from a purely technical point of view as well, we've got this bearish trend line as well to keep an eye on, which has offered resistance once again at around 154-ish or thereabouts. And if rates remain below this area of resistance, then we could possibly see some further selling in the days ahead as more and more support levels potentially break down and the risk of FX intervention increases. But if the dollar yen breaks above the trend line, then 155 could be the next target for the bulls, and we could potentially push even higher than that. But a lot will depend on the incoming data from the US. Now with the government shutdown, this means that we'll only have private sector data to consider, and among them the ADP non-farm payrolls report is going to be released on Wednesday, which is expected to have rebounded by 31,000 net jobs in the month of October. We'll also have the ISM services PMI, which is expected at 50.7 on the headline front, but do watch out for the employment component of that, which is what the Fed is now focusing on, employment. So any changes there could be more meaningful than the headline ISM PMI itself. Now going back to the dollar yen chart, some of the other key levels to watch include 152 area. Should we get a breakdown below the 153 to 153.30 support zone. So 152 is where the 21-day exponential moving average comes into play, as well as this being an intraday support and resistance last week. Below that, I don't see much in the way of further resistance until the next round handles like 151 and 150. Those are the next key downside targets. Then we have this trend line coming into play at around 148.50-ish or thereabouts, depending how fast or otherwise rates drop to it. We also have that 200-day moving average to consider around those levels as well. But we're miles away from there, and we'll cross that bridge if and when we get there. For the time being, the key area of support to watch is at around 153 to 153.25-ish. The euro dollar continues to ease lower as it remains inside this bearish channel that it has been stuck inside since rates peaked in September at 119.18. Since then, we've seen a series of lower lows and lower highs, but we haven't seen a major lower low yet. The most recent low was created in August at 113.91. So for as long as that low doesn't break, we won't have any significant lower lows, which means the technical bias on this currency pair will be neutral unless we create a lower low. And even then, further downside will be limited in this currency pair, given that the ECB is turning neutral and there are no more rate cuts to be expected in the near term, whereas the Fed could deliver another rate cut in December, which could put pressure on the US dollar. Anyway, the key level to watch is at around 115, which is where we are right now at the time of this recording. The area between 114.60 to 115, the shaded region, is very important given how price has reacted from around this area in the past. Can we see a potential recovery from this zone is the key question. So far, there are no signs of a recovery, but if rates do bounce, then what I will be watching for is a clean break out of this bearish channel for me to turn tactically bullish on the euro dollar once again. So I think the downside is limited due to fundamental reasons I have discussed in my previous reports on the euro dollar. But from a purely technical point of view, I will only turn bullish on this currency pair if we get the right bullish signal. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. See you in the next video. Take care.